those of us that are online to be able to take advantage of the opportunities available in the market. So last week, if you look at the scope of engagement that we had last week, can you remember a few of the things we learned last week where our last video stopped? Miss Florence.
Yes, please.
Okay, where did we stop? Where would you like? Were you having any issues? What can you remember from the last class?
Okay, so from the last class, I got something from the MACD. The MACD, what do you call it, theory, and also RSI, and then Bollinger Band. I got something from it. So what I got from the MACD was if the orange line is down, which means that the market is up, right?
Yes.
And when the orange line is up, which means the market is down.
Yes.
So, yeah, when I see the what do you call it, interface, I will understand what I'm doing there. I will know what I'm doing there. Then we move to Bollinger Band. We move to Bollinger Band too, and you explain the resistance and the support too. And you said at times resistance can act as support, and support can act as resistance.
Yes.
Yeah.
Correct. You are very correct.
Yeah, and also you also said about the RSI that if the RSI is up, which means that there is high demand, like it's overbought, and also if the RSI too is down, which means that it's oversold.
Oh, perfect. Oh my God, this is my student. A student. Okay, yeah, that's on point. That's really, really on point. Wow.
Yes. I don't really remember much. I'm yet to complete the video. This week was hectic, so I still have you to complete again. So I will get it.
All right, that was perfect. So this week we are going to look at new perspectives and new dimensions of the cryptocurrency market. Today we'll focus on risk management, volatility, business to business use case, and so that you can learn how to make high profitable trades while you are minimizing the risk that are in the market. For the fact that you have been able to actually identify these different scenarios in the market for Bollinger Bands, RSI, it then means you know when the market is to go up and when the market is to come down. One thing that I did not lay emphasis on is this tool that is on. Can you see my screen?
Yes, please.
If you can see my screen, you will notice that there's something on my chart. And that thing that we have on my chart is a tool that is called Bollinger Band. And this tool that is called Bollinger Band, I told my students that this tool is as old as the 13th century because most mathematicians and most statisticians of the past use this tool to be able to get accurate and probable results from their findings and from their data. Now, this tool is called Bollinger Band, and this tool has very intricate points that we must take note of. If you notice this tool, whenever you want to use this tool, you use it to either check where the market is going to or where the market might possibly fall down to. Now, there are different compartments on this tool. 1, 2, 3, 4, 5, 6. If you count it from this bottom here, you have 1, 2, 3, 4, 5, 6, 7 different compartments. These 7 different compartments, you can see that we have this number here, 1. We have 1 here, somewhere around there, 1.1 in bracket for something. Then we have this 0.7. Then we have 0.6. We have 0.5. We have 0.3. We have 0.2. And then we have 0. Now, these are the different levels of the Fibonacci retracement tool. This tool is called the Fibonacci retracement tools, and these are the different levels of the Fibonacci retracement tools. The Fibonacci retracement tool, as I speak with you, is one of the best tools to be able to predict your entry point into the market and your exit point out of the market. And when I say your entry point out of the market and your exit point out of the market, if you notice these numbers, there's something we call POI. POI means point of interest. I'm going to use a bit of comment here and maybe put a comment here and say there's something called a what? A POI. A POI, which is point of interest. Which is point of interest. That's the point at which you want to quickly buy these different markets. The point of interest for every Fibonacci retracement tool that you are using is a level that is below this 0.6. Whenever your market has gone up and your market drops down and your market comes to this level of 0.6 and gets into this level of 0.7, it then means you are entering into a point of interest zone. At this 0.6 is a very good level of point of interest. So you can see that as even when this market broke down, can you see it broke the last support, right? And I told you that anytime the market has tested a particular support more than 3 times, it always break. 1, look at this test. 1 here, it tested this support 1. 2, you can see it came to test it the 3rd time here, right? And it could not hold, and it broke down that particular structure. And once it broke down that particular structure, what you find is a high level of demand zone. So this level, whenever it breaks down that structure, what you have here is called a high level of demand zone, a high demand zone. And whenever you are in the high demand zone, you always see a very bullish rally up, because the demand at that time will just be buying the market for what? For upward rally. And that's one of the major reasons why we consider this level as a point of POI, point of interest zone, because we want to be able to buy any cryptocurrency that you have in the market. You want to be able to buy this cryptocurrency at a POI zone, which is point of interest zone. The point of interest zone, apologies about that. The point of interest zone is characterized by high level of demand and a breakdown of structure. A breakdown of structure and high level of demand region that is characterized by a very bullish rally. And this is what we call a what? A point of interest zone. So 1, 2, 3, it broke this structure. And then we fell down. You can see when we fell down to this point where this line is. You can see we bounced up and then came to break that point of this line again, try to consolidate, and then we started rallying up. And you can see here we have formed a very good bull flag. And how do you use the Fibonacci retracement tool? The Fibonacci retracement tool is made up of different compartments. Whenever you are at the bottom of the Fibonacci retracement tool, just like you can see on my screen when we are here, you can buy into the market and you will know that the market would always go up. The market will definitely go up. It will go up to this red zone. But if you are in the red zone, never buy into the market when you are in the red zone. Notice every time we are in the red zone, we plummeted or we came back like this. So that means if you bought then and you try to do the buy and hold strategy, you would have lost some money in the what? In the market. Do you understand?
Yeah.
Now, we also went up again this region like this, right? And you see we went up, we had a correction or a retracement in the market and went up again to the red zone, trying to break, maybe try to get a higher high here or maybe get a very good upward trend, but we could not do that. Just like you can see, our rally all ended at this double top, and then you see this red zone. I said do not buy here, normally no buy here. So you can see this red zone, you see we came down, right? And then we dropped. So now if you are a smart technical investor in the market, what you would now understand is that, okay, with this type of market now, now that we've broken down structure, why at a good point of interest, whenever you're at the 0.16 level, 0.86 level, you are at a point of interest zone. That's where a lot of smart money is looking at buying these cryptocurrencies in the market for high level of what? High level of profit. So if you are buying here, you can see that you would have made profit from about $15,000 to maybe currently $30,000. But now, notice that I want to teach you something new today. And what I want to teach you is how you enter into the market with these different entry levels and these different exit levels. So ideally, if you were to enter into the market, let's say this level here, this first level of the Fibonacci retracement is your entry point 1, and you were entering around 2020. Your entry price would be like maybe $4,999, and your exit price should be like maybe $17,000, as long as it's within this compartment. It will always rally in between this compartment. Notice that when we got here, you can see there is a drop. You can see that pullback to about 15,000. So if you had sold like maybe 17,000 plus, you would buy again at that 15,000 for upward trend again. Now, notice that even this upward trend, when it started here, so that means when your EP1, which is your entry point 1, quickly let me go on that. Let me see. How do I put EP1 there? Here's our recording session. Okay, so I would do a whiteboard here. I will do a whiteboard here. Whiteboard session. Isaac, can you? Are you able to follow? Are you understanding?
Yeah, but I wasn't in the class last week because I have eye issue. My eye was paining me, so I was in the hospital. I couldn't meet up with that.
So sorry about that. I sent in the videos for last class to the group. I sent in the videos for last class and the previous class to the group, so you can just go through the video.
YouTube. Okay, check it.
Okay. Perfect. So I would do this so that we can actually all learn very well. So let's say we have a PO. Let's say so EP means entry point. Entry point, ENTRY, entry point. EP, so normally we have it as EP1, then we have it as EP2, right? Then we have it as TP1, and TP2. So at these different points where we'll have these different things, so our EP1 now will be so let's take this to this level. Let's take this here. So if we want to enter our EP1, $4,900, we are exiting, which is our take profit 1. Take profit 1 here should be $18,000. So if you are to write this out, you say your EP1 4.9K. Your TP1 is 18K. That's $18,000. Now, go back to your chart. What is your EP2? Entry point 2 is at entry point 2. When you look at this compartment, somewhere close to this line, you will see 18,672. Exactly. So, and you notice that it always moves. You see, this compartment does not have any friction inside. This compartment does not have friction inside. So the market will always move in this compartment without friction until it touches this next line. So you can see it moved in this compartment again without friction. So your EP2 would be 18.6. Your TP2 would be 28.4. And how do you get your Fibonacci retracement tool? Remember, I went to the extreme left-hand side. I clicked on Fib and Grand Tools. And when I clicked on Fib and Grand Tools, it brought me to this place of what? Of Fibonacci retracement tool. So if we are going to write this now, we are going to write this as our EP2 18.5K, right? Then TP2 is 28.4. maybe 28.1k. So at 28.1k, you will see that we still continue to rally up. Now, when we continue to rally up, see if you are taking profits here. So EP3 was 29.5k, TP3 was 36k. If only you took profit at 36k there, you would have noticed that when this market rallied up and it broke down the structure again, you see that it came down to about 29k here before it started rallying upwards again. So within these different levels, you must ensure that you set your buy price, your buy entry, and your exit strategy. You must ensure that you are having a strategy that you are buying here and you are exiting somewhere close to this line. It should not touch the line, no, because just like you can see, let's come to this. Okay, we're looking at it from 2020. Let's come to maybe 2023 where we are now. In March 2023, you can see, okay, let's say in January 2023, you can see we started rallying up from this line. We finished this whole compartment. We went up very well. So our theory holds true. If you had entered at 18,600 and you say anyhow, now so this thing will be, I go come on for 28k. The market really would have respected your analysis. And when it goes to 28k now, you can see as soon as it hits that particular resistance, because when you go back, the secret to charting analysis is to always look left. And when you look left, you will understand something that has happened actually. You understand that here, you will see that there is this part too. Here is a market, this is a market structure, this is a market structure, and this is a market structure. Can you see these different points? Yeah. These are our future. This is market structure. So the secret to charting analysis is always look left. And you can see that because we have 1, 2, 3 different points, this place is now becoming a very strong resistance to break. Because for this market to go up from this point now, it needs to break through this level, it needs to break through this level, it needs to also break through this this level. So this place is now becoming a very strong resistance for Bitcoin to break. And that's the reason why once Bitcoin hits this price, you can see Bitcoin is actually falling down again. Can you see? Because of the resistance, it's trying to have a pullback now to maybe like this region. Let me put a horizontal line there so that we can understand that region. The reason why I feel that's the region is because I can see previous market action here. And the previous market action I can see here. Can you see this point? Let me increase this again. Full screen mode. Wow. The previous market action that I can see there, can you see this point? Is a market action, right? I can, if I go back to, I'm sure when I go back in time, I will see some market structures. Okay, this is already 28k, so I might not see market structure on that part. But when you see towards 2020, you see another market structure. So if this thing fall down, it will stop 1, 2. These two places now, can you see these two places will now act as support? From our last class, we learned that at every point in time, every resistance becomes a support, and every support becomes a resistance. So when this market is falling down, it will fall down to this former support point that will not be. It will fall back to this former resistance point that is now going to act as a support. So let's say we have the market fall down to $25,200, and then we will bounce from this point now, right? We'll bounce from this line and start going towards towards this line. So if you are to enter into the market and you are to buy new forms of this cryptocurrency, is either you are going to set your buy order at this $24,000, or you come and set your buy order at a very safe zone here, which is $29,500. And you know that if you enter into the market at $29,500, at least you must rally up to $36,150 or $280 before you get out of the market. Although this market will continue to go up like this because we're in phase 1 of our bull market, right? However, this is how you enter into the market and exit the market using Using Fibonacci retracement tool. Is there any question that, is there anything that you do not understand and you possibly maybe like to ask?
No, please. Not now.
Okay, I'm glad that you are understanding very, very well. Oh my God, I think I pressed full screen. Where do I get used to get out of this full screen? Yeah, oh. I'll try to check for where my full screen is. Okay, yes, I've seen it. Okay. Oh my God, again. Escape. All right, so we have this already as a good layout for Fibonacci retracement. Understand again that I said your point of interest should be the point where you are buying. So all you need to do, this is not a market that you should be entering now. It's a market you should now watch. Is this market going to fall to somewhere here? Is this market going to break this next level so that I can enter into this market from here, or I can enter into this market somewhere close to this line? Ensure you wait for all conditions to be right before you enter into the what? Into the market. Ensure you wait for all conditions to be right before you enter into the what? Into the market. So that's how you actually determine your entry point and your exit point in the market. Even if you are to do Satoshi measurement, just like we normally do, or Satoshi calls, just like we normally do, it will still be like that. That's how you will use to determine which Satoshi level are you entering at and which Satoshi level are you actually going to exit at. Because when you make profit, you want to keep the profit. You don't want to make profit and then the profit now starts dumping again into the market. Like for example, now you made profit now like this. Let's say you saw this candle got to like 31,000, and then after making profit for 31,000, now this candle is at 27,000. You are now losing the profit again. It's not the best. So you must apply these different risk management techniques to see that you stay afloat in the market. So today we are quickly going to delve into risk management, volatility, business to business use case that we can have high profitable trades. Now, how not to lose your money on the first day. So let's say you get into the market now and you don't want to lose your money on the first day. That's where the concept of a trading strategy that has a portfolio diversification of 6% versus what? Versus 2%. Which means that, let's say you have entered into the market. You are entering into the market with maybe $10,000 of your money. This 2% here means that you should use maybe 2% of your portfolio to be able to engage in every trade. So if you are using $10,000 of your money and you are using 2% of that to engage in every trade, you can use more than maybe like 10%. However, for the sake of this particular class and high level of professionalism, see, it depends on the investor. This is the recommended calculator, CAL. So I'm bringing out my calculator. So for what we have on our screen, watch, if you have $10,000 and you invest times 0.02, that would be what? $200. So for every asset per time, maybe you just take $200 out of that your $10,000 portfolio and invest it into it per time. When you get into the market, let's say you buy any cryptocurrency now, maybe the cryptocurrency is selling at, currently Bitcoin is selling at 26,700. Now, you need to have a tolerance level of risk and define when you must get out of the market. Defining when you must get out of the market means that you must put a stop loss to the market conditions so that the market does not take your money away for what? For vanishing. And how do you put a stop loss? So if I enter into this market at, say, 26,700, a stop loss of 6% or 8%, 6% or 8% times 0.06 minus 20, I think 26,700, right? So if Bitcoin falls to $25,800, it's $25,090, we must get out of the market. That means our portfolio risk management of 6% has been reached, which means we lost about $1,000 something in the market. However, that's not a problem. We have gotten out of the market and still preserved our $25,000 that is left. So this you must do, and you must ensure you take profits in the market. If you do not take profits in the market, nobody ever went wrong for taking profits. Have you ever seen anybody that went wrong for taking profits? Just say you made business. Nobody goes wrong for taking profits. So ensure that as you engage with the market, when you get a good entry price, that entry price that is actually going up, right? Also ensure that you also have a good strategy to take profits in the market. So you can use your Fibonacci retracement tool to draw these lines across the assets you want to buy. So let's say if you go to the signal room now, let's say let me go to the signal room. Let me search signal. Let's say signal SIGN. So let's say we go to the signal room. We say enter Iris, IRIS. So we'll go to our trading view. Our trading view is where we analyze and check what is going to happen. Like doctor, we check what is wrong with the patient. IRIS. So Iris USDT is trading on Binance. So we click on it. So you see our chart has changed. Now that our chart has changed, we said we should enter that market where? What's the price of entry? Price of entry is 0.028 to 0.025. So currently it's trading at 0.025 something. So it's still within our high level of demand, because you can see that it has pulled back. Now, how do we now check where to have entry and exit strategy? So take your Fibonacci retracement. I will go to the lowest point of the chart and draw it from the lowest point of the chart to the highest point of the chart, which is here. The highest point of the chart is this point. So when I draw it to the highest point of this chart, you can see that just like with the other financial instruments, we're at a very low volume or a very low upward trend side for this, and we can actually see this move from here to about, so entry price would have been 0.154. However, we're still at a good entry price, right? At this good entry price, we can still go further to like maybe 0.074. This is a possibility for this cryptocurrency. Do you understand? And you can see, until we even get to that point, that's when we start even meeting things like this. Can you see one level? Can you see previous market action? This might act as a resistance. This might act as a resistance. This point here might act as a resistance, because you can see 1, 2, 3 strong points. So let's even say we move from there to here. At least we must get to 0.051. However, I know that once we start moving in that direction, these weeks will not really be the problem. We will definitely come and hit this point before we will have that retracement back again into the market. So a buy into this can see you make at least 100% of your portfolio in the market. So this we use to be able to analyze this different cryptocurrency market, these different tools that we trade in the market, and be able to see that we're actually making money from the volatility that is associated with the markets. So I would be looking in the context of you have USDT, you have so let's go to coin market cap. So you have USDT, you have BNB, you have whatever it is you have. It is for you to now say, okay, I am ready now to buy. So let me go to Iris now, IRIS. Wow, I don't even know. I think this should, let's say IrisNet. Okay, so which market is IrisNet trading? Where can I buy Iris? So you come to market here and click on. Let me look at the all-time chart. All-time chart. This coin was like 0.25 plus before, and this coin started trading since like 2020. So okay, markets. Where can I buy it? I'll click on markets. Now it's showing me that I can buy this thing in different markets. So hey, that's good. So all these different markets, I can buy them. These different markets, from Binance to Gate.io to BKX to MEX. Any of these cryptocurrency exchange that I go, I will find this to buy. I will find this to buy. However, in using in setting up you guys have set up your what's it called now? Your decentralized wallet. And as you have set up your decentralized wallet, it is good for us to make a trade using decentralized wallet. So let's find a cryptocurrency, Moralis. So I use Moralis Money as my AI tool for finding some of the best market opportunities, in especially some of the best market coins. So I've saved a few queries. Ideally, when you want to use Moralis Money, you just come to Token Explorer here, and then you click on, because there are different types of analysis. There are 3 types of analysis actually. The fundamental analysis, which involves news in the market. The technical analysis, which involves what we just did a few moments back, that we checked Fibonacci, MACD, chart, candlestick. And then there's also one type of analysis called the on-chain type of analysis. This on-chain type of analysis, it helps you to be able to understand the coin age, the coin security, the fully diluted market capitalization, buyers, experienced buyers, and all that. And using this type of analysis, you can be able to predict much more accurately what you have. So let's say we want to buy a coin. Let's say we want to filter for a coin we can buy on maybe Binance Smart Chain. Like this coin, this is on Pulse Chain. We can switch it from here to Binance, and then say, okay, let's look at the security score. Security score should be greater than 80. So the platform that's providing it is DexScore. Let's add another filter. Let's say experienced buyers. Experienced buyers increased by at least 50 in the last in this month. So let's add another. Let's say what should we use? Somebody suggest.
The experienced sellers.
Okay. Let's say this one now, we don't want people to sell us, so maybe we might put decrease by maybe decrease by 50. So let's add another filter. What else? Okay, Miss Florence, give us one. What should we use for this?
Anyone.
Which of them should we use? Holders. Good. Number of people that are holding the currency is a good metric to actually use to determine. Let's say holders increased by maybe 300 wallets. 300 different wallets. Another thing that is good is coin age. The coin age, you want to be able to buy into coins that are just coming up now that maybe don't have so much market value. So let's say less than maybe 5 days, select time frame. So let's run the query. Wow, our query did not give us any results. So orders increased by, let's say 200, let's say 100. Let's run query. We've not gotten any good results. Experienced sellers. I've not used the experienced sellers once, but let me see. Let's say sellers did 20. Let me see. Run query. Wow. We're not getting anything on Binance Smart Chain. Can we get anything on Ethereum chain? Let's see. I just switched to Ethereum. We're not getting there. Okay, so maybe I change this to liquidity, from experienced sellers to liquidity. Liquidity increased at least, let's say, $50,000 this month. Let me run query for that. So you can see we have these different tokens now. You can see, I think I can also still filter this, but I can do this too. So this one was minted in the last 1 day. Fanta was minted. You can see holders 2,000 plus, this and that, just like you said, buyers. So any one of these cryptocurrencies, what you would be looking out for now is the market capitalization here to be very small. This market capitalization here to be very small. So let's say because if you have like 100 so look at this different market capitalization. If you have $166K, look at this next market capitalization, $8.3 million. So what if this $163,000 continue to move to this, or this $161,000 continues to increase to like this $8.3 million? Do you know how much profit you would have made from the market? Do you understand? Because that's more than 10x. That's a lot of money. So we use this tool for on-chain analysis here in Verm, so that we can also find 1 or 2 cryptocurrencies that will be able to do well over time in the long run. So you can just now sort out and say, okay, market cap should show you from the lowest to the highest. So baby refund B. Can you imagine? I was watching can you imagine? Wow. There was a whale wallet. Jesus. There was a whale wallet I was watching yesterday, and I just realized that it's this baby refund that they actually they are looking into. I just realized that this baby refund. Anyways,
is it a coin?
You said?
Is it a coin?
Yes. That baby refund.
Is it a crypto? Okay.
Yes, it's crypto. It's a cryptocurrency coin. It's on the Ethereum blockchain. Because we're running so if we go on Binance Smart Chain, let's go on Binance Smart Chain. Let's see if it will run us query on Binance Smart Chain. On Binance Smart Chain, we have these different cryptocurrencies. We have Bob Coin at $532,000 market cap. Wow. Holders 5,000 plus. Wow. Liquidity $220K, $145,000. Pepe Dubai. Wow. Okay, so this was minted 2 days ago. This was minted 3 days ago. So let's say if we want to buy maybe something like this Bob coin now, how do we buy this Bob coin if this Bob coin is what is interesting us? So Bob coin, we'll say what is happening with Bob coin now. Look at this, look at the honeypot. Security plus status. So for you not to buy a bad coin that maybe all your money might go for vanishing, like you see this one, security status, you can see honeypot, no, buy tag 0, sell tag 0, proxy contract, no, you can see all the many good things that we checked, right, for us to be able to get access to, a lot of people create coin these days, so you understand, so that you're not just going to buy the coin that somebody has just created to collect your money. So we use some of these tools to see how we can best beat the market. So if I want to buy this now, what I could click on now is go to, maybe can I buy from their websites? Most times you can always buy from their website. Bob coin BSC, say buy Bob. So I click on buy Bob. So it's taking me to PancakeSwap.finance. PancakeSwap.finance is one of the biggest DEX aggregator for the Binance Smart Chain. That's a decentralized exchange aggregator with good liquidity provision for the Binance Smart Chain ecosystem. You can click on swap to swap. You can click on trade here to ensure you want to trade. So when you are here, what you do is that you can switch from Ethereum chain to Binance network. So if you switch from Ethereum chain there to Binance network, you will see different options that would authorize that your switch. Now, when you authorize that switch, what you do next is that 1 minute while this is loading up. 1 minute while this is loading up. When you authorize that, what you do next is that you connect your wallet so that it can spend. Connect your wallet so that it can spend. So I'm going to now paste that contract address, Ctrl V. Where is Bob token again? Bob token. There's the contract address for Bob token. Okay, this is the contract address for Bob token. Ctrl V, Ctrl C, Ctrl C. I want to buy Bob token now, so let me Ctrl A, Ctrl V. Can you see the token Bob? Can you see it? So I click on import. Can you see that? Can you see I'm doing my own? So it imports. Yeah. So Bob token is now available for us to purchase. So we can say let's use 50% of our portfolio to buy Bob token. So if I'm buying Bob token of 50%, it then means we'll be buying about 11 million worth of Bob token. So let's say 11 million worth of Bob token. You now click on swap and then click on confirm swap. When you do that and click on confirm swap, you will see that this cryptocurrency would automatically purchase itself. Now you click on confirm here, and then you will find that this cryptocurrency that we just purchased now, you can add Bob to your wallet so that you can see the Bob tokens reflecting in your wallet. So click on add token. Can you see my tokens are now reflecting in my own wallet? You can also buy so there, I think there was another one the bots recommended there. Let's see. I think he recommended 2, right? Recommended another one. Recommended 1, 2, like that. So let's go back. Let's see. Pepe Dubai here. So we should get Pepe Dubai. So this is the contract address. Yeah, I just copied Pepe Dubai contract address. So I'm going down here now. I will paste it here. Ctrl V. Can you see that? I want to buy this now. Let's say I want to buy with maybe 75% of my portfolio. Maybe maximum I can just do 75% of this portfolio and click on swap. And when I click on swap, you just see that it will automatically execute that trade for me, and I would have successfully traded. So the same thing you do on your centralized exchange on Binance that you buy and sell, right? It's the same thing you will do with your MetaMask. You see, I'm using my MetaMask for that now, right? Same thing that you can do with your MetaMask to see that you are buying or you are doing what? you are selling. So I've just clicked on that now, and you can see that I've just bought this particular cryptocurrency. Is there any question on the usage of this platform that you might want to ask before we go forward?
No, please.
Okay, so apart from swapping these cryptocurrencies from one form to another, maybe from BNB to the Pepe coin to the Bob coin to the Chainlink to anything, one thing you can also do with your pancake swap is the fact that you can bridge token from one network to another, which means that if the token is on Binance Smart Chain and you want to move it to Ethereum blockchain, you can move it. All you just need to do is click on that bridge button that I clicked there. You will select the asset that you want to bridge, just like as you are seeing. So from Ethereum to what? To Arbitrum. From Ethereum to any one of these different blockchain. You know, the blockchain or Web3 provides interoperability. And when you use Web3 exchange or DEX like this, you're able to actually experience the full level of Web3, of which interoperability is part of it. If you want to earn, when I say earn, let's say you want to stake your cryptocurrencies to be earning some percentage of that every month, you can come to farm here and click on earning or stake cryptocurrency. So you stake some of the cryptocurrencies that you might buy, and then you'll be earning some rewards from it every year. Depends on your lockup time. So that also works as a way to make money in cryptocurrency. And then when you look at it too and say, okay, do you want to continue to use centralized exchange, or do you want to continue to use decentralized exchange? So anytime a coin is called for you, always check the market where the coin is trading. See if it's in a centralized exchange, right? And also see if it is in a decentralized exchange. Like you can see, this Iris testnet is not in any decentralized exchange. And that's the reason why you guys are also having a centralized exchange like BitGet, like Binance, to also do what? To engage with these different cryptocurrency. So we've bought that one. We've bought these two now, using some of the funds that we have in that wallet. So the next thing we're actually looking at truly today to break down very well is the widespread adoption and development of blockchain infrastructure. Looking at infrastructure as a service. So truly, blockchain infrastructure provides security features. They help to keep running data centers and also keep servers running. One of the key infrastructure that is lacking, especially with Bitcoins, is that Bitcoin ATMs are not available. I don't know if maybe you have one very close to your house there, but if you want to get money, cash or something,
available.
We don't have so much of these different infrastructures available here in Africa. Bitcoin POS too, they are not really available here in Africa. So I have like maybe $700 worth of Bitcoin. If I go to ShopRite or Dynasty or Cubana or Kellogg's or something or KFC or something, or Chicken Republic, I will not be able to use that $700 that me and my family just finished eating, and I want to pay it to the POS as digital currency. It might not be possible. So that's a big infrastructural deficit and drawback for this technology. One other major thing is the fact that innovation hubs and centers are now available. Like in one of my videos, I was talking about Nano Ledger wallets. I had to show the people what it looks like. I had to show them my personal one. There are no places where you go to like this. Let's say in Nigeria, you see like mining machines, you see like maybe some nodes that have been set up, and a couple of these things like that really show you the way that is done physically to see that this Bitcoin now here that the producer now, so it could be. Do you understand? These things are actually lacking, and experience is the best teacher, and you can't be the place of experience in the life of any man. Students that actually interact with blockchain infrastructure, they do better, because one of the major reasons why I'm even able to teach you guys at the moment is because I've interacted with the software infrastructure enough. I've also interacted with the hardware infrastructure enough, and that's why I have knowledge in my bubble box to be able to do what? Give out this knowledge. So if we don't have that type of infrastructure and we don't engage with it to learn it better self, it then means no, it might not further as much as we want it to further. Now, when you look at it, you say, okay, what is if as an investor, you just start to get investor vibes, say, okay, you want to provide infrastructure for this country. What is the profit margin for this infrastructure? What can you really make from blockchain infrastructure? So let's say, for example, a blockchain ATM. What's the average cost of blockchain ATM? So let's say if the average cost of a blockchain ATM is around $10,000 to $15,000. Let's say $10,000 on the average, right? So let's say you bring in 100 ATMs into this country. My very good friends, I like my calculator.
Yes, very much.
So let's go and calculate money.
Withdraw money.
So if you bring 100 ATMs into this country now like this, and you spend $10,000 to bring each and every one of them in, that means you would be spending about $1 million to bring this ATM machine into the country. Cost of installation, maintenance, and all that, let's say $1.5 million. Transfer every single thing. You cannot even spend up to that. Let's say $1.1 million actually. So at $1.1 million, you have invested. Investor have given them the vibe. Now that investor have dropped investor vibe, what's the profit margin from it? Ideally when you send bitcoins, looking at Satoshi measurement that we learned, they always charge you like 0.000 maybe 0 Ethereum to send bitcoins, right? And as of today, this 0.00 Ethereum in the open market this 0.00 Ethereum in the open market is equivalent to how many dollars? Say oh my god, it's equivalent to maybe about $8, right? Now if they charge you this amount to maybe withdraw your bitcoin, maybe send your bitcoin, just imagine in Nigeria we have 200 million people. We are not looking for these 200 million people. We are looking for, is it 100 million? No. 10 million? No. 1 million? No. Let's look for only maybe 100,000 citizens in Nigeria. At least South here, Delta State here, we know that we are over 6 million plus. South here, we know that we are over 20-something million plus to 30 million. Let's say we look for 100,000 Nigerians to use your products in a day. That's these different ATMs in a day. So if 100,000 Ghanaians are using this as well, that will be giving us 30 bitcoins every day. Now, at 30 bitcoins every day, multiplied by the current price of Bitcoin times maybe $27,000. That's $810,000 profit. That's the current value of what? 30 Bitcoin on a daily basis. When you do that, multiply that now by what's the dollar? So if you are making this every day, let's say in 30 days now, or let's say your ATM functions for 25 days of the month, ideally, that's what, 2 point something million dollars for the month. And it's only 25 days that you open shop. You have already covered your cost price, you have covered your what, your this thing. So you will now do this now for what, for 12 months. 1 2 3 comma 1 2 3 comma. Oh my god. That's about 243 million from an investment of about what, just 1.5 million dollars. So guys, if you have money, if you have on the investor vibers, if you grow like this, please look at how to fix up some money into infrastructure as a service, blockchain infrastructure as a what, as a service. Next week we are going to be looking at the creators economy. We are going to be learning about NFTs, DeFi, Web3. Although we have used the DeFi wallet today, but we are going to go deep into it more so that we understand what NFTs are, the types of NFTs, the NFTs business application, how you yourself you can create NFTs. I showed you guys how to create your own cryptocurrencies some weeks back. How you can create your own cryptocurrencies and just launch it into the market. People can just go and buy your cryptocurrencies if you want. And I will still show you now how to create your NFTs and also put it in high level market places. Are there questions you would love to ask me that maybe you possibly did not get or you're not clear on?
No.
Okay. Have you been able to start? That's so we've actually come to an end for this class for today. However, one major thing I want to ask: have you been able to start trading now, Florence? We've been able to. So you need to start engaging after this class so that once you are engaging after this class, you now know your entry point, your exit point, how to buy, how to sell. If you are using Binance to buy, you buy. If you are using decentralized exchange like MetaMask or decentralized wallet like MetaMask to buy, you also do what? Engage using the examples that we have shown at the what? At the moment. Is that good?
Yes, please.
Okay. All right. So on this note, this ends our class for this week. Any other thing that you, Isaac? Is there anything that you'd like to add or ask?
Not really yet.
Okay.
I'm just trying. I the first time I started,
yeah,
I was using one device. So when I changed my device, everything just scattered. I'm still trying to just get some of the apps back and set up all those apps. I changed my device last week, so.
Oh, so sorry about that. Tell me where you're having challenges. Anyway, you're having challenges, just let me know so that I can come in and help. I can come in and quickly help. I'm very much available for that. So, looking forward to getting that feedback from you. And guys, until next time when I see you and we'll learn about the creators economy. It's from this end. It is your very good friend Rume Dominic saying, have a blessed week.
You too, sir. Thank you, sir.
Thank you.
All right. So I'm going to send the recording of this class to the group so that we can go over it again.
Okay.
Okay.
All right. Take care.
Thank you.